Hi, welcome to this video, which is on the 26th of January. It's Wednesday, and in this video, we are going to be looking at the USD and giving our updated outlook and forecast. Now, we're going to pick out some USD pairs which we think could offer attractive risk-reward trades. Now, today, we do have the Fed, a high-impact news event. So we're going to look at what we think the potential reaction could be to the Fed, and also, obviously, our favourite pairs. Now we'll go over to the charts right now, but just before we do so, always please do keep in mind, it is my view, as of right now. It could of course change in line with market action and conditions. If you want all our trading techniques and you want to learn our strategy and check out our daily technical sentiment analysis of 14 FX pairs, all you need to do is go to the link beneath this video. You get live access to our member centre. Also, you can follow our Facebook page, join our Facebook group of traders, and finally, check out our recommended regulated broker. Right, what we'll do now, let's go take a look at the charts. Right, just before we go and look at the pairs, let's have a look at what's expected from the Fed. Market is looking for the Fed to signal that they're ready to raise interest rates as soon as March, and also the central bank's asset purchase program with stimulus, which has really swelled and increased the size of the balance sheet, is also expected to end in March, and the market is discounting 4 rate hikes this year. A lot of analysts are saying, well, yeah, the Fed and Chairman Powell could be a little bit cautious, a little bit dovish, because you had a fall in equities. I do not think they can be too cautious or dovish. They've made it clear they're dealing with inflation, and I expect them to have a little bit of a hawkish tone. I think, 4 rate hikes, you could get more this year. So I'm looking for an overtly dovish Fed, a kind of neutral Fed, completely as expected. Might see the dollar just sell off a bit, but I think any pullback would be a buying opportunity. But, if they're on the hawkish side, I think, dollar has got more upside. And, in terms of one surprise they could spring, and I've seen a few sensible, or my view, sensible analysts say this, stimulus, the asset purchase program, why not, finish it this month? There's no logic in keeping it going now. So they could do that. That would send a real message to the market that the Fed are serious. I really think the market generally just doesn't want to see the end of cheap money. It has to end. So I'm looking for a possible mild pullback in the dollar, which would be a buying opportunity, but hopefully we see some follow through to the upside. Now, there's other bullish fundamentals for the dollar. Stock markets, if they continue to struggle, and that's bullish dollar and safe haven status. Also, you've got slowing global growth. Historically, that is good for the dollar. And finally, you've got tensions between Russia and Ukraine that could get a lot more serious. Obviously, we hope that doesn't happen, but it's not looking good at the moment. So geopolitical problems bullish the USD. Now, in terms of pairs I'm going to look at, I'm going to look at a pair that's been really boring recently, but that could be about to change. It's Euro USD. Right, on Euro USD. Now, in terms of USD, look at this price action, just choppy, sideways. You did have a break of the 114 level. But the time was saying, just felt that was a stop hit. People who are short probably had their stops behind 114. And basically, the Euro should come down, saying at 114.14, we're, about 160 pips up. But we're only 88 pips from this big 112 level. I think it's worth a small trade. And if this level gives way, I think volatility will pick up. We see a massive sell-off to the downside. Now, in terms of the euro, it's only a tiny position for us. Our major focus is in the euro correlated currencies, and we think there's some great opportunities in them, which I'll come to in a moment. But the euro's got limited upside in our view, and I'll just show you the reason why in a chart from the market here. That's the ECB balance sheet. In terms of the Fed, they're going to be reducing asset purchases. The ECB are ramping them up. Balance sheet now equal to 82% of Eurozone GDP versus the Fed's 38.2. They can't stop printing money. They've got to help the poor nations. And there's a lot of analysts saying the ECB could hike rates this year. I think one rate hike is totally discounted. I see no chance of that happening whatsoever. Obviously, anything can happen, but I've got a feeling the euro soon will break into a big downtrend. And also, with these Ukraine-Russia tensions, if they boil over, okay, let's say you get sanctions or punitive action from the EU, etc., on Russia, Russia can cut off the energy to Germany. They could shut the German car industry down, for example. I'm not saying it's going to happen. We all hope there isn't a conflict in Ukraine, but it's not looking good at the moment. So yeah, it's very much limited upside and potentially a lot of downside. Right. USD CAD. Now, when I did my weekly forecast just over a week ago, said, in terms of being long the USD against the major commodity currencies, really like the look of it long on the CAD. You had a good correction, get long on that, tail exhaustion there as we come back above 125, so 125.20. We chopped around a bit, a few tails going down. Then we pushed off to the upside and we up at 127. Normally, if I get 150 pips in this current market, which lacks volatility in a pair, I very often will take half away and look to re-enter. On this occasion, I didn't. And then we were coming back down this morning. Now, in terms of there's been a change since I did my AM update, and we got stopped out. The tail came down, took my stop. I think it was within a few pips, and now we've rallied back up, reset the entry above 126, so back in at 126.20, and I got my stop back behind this big blue. We're hoping that we're going to get at least 300 odd pips to the upside, up towards the 129 level. But very disappointed with that. Ended up with 40 pips on our closed position. But got to have stops in. Sometimes you do get caught for just a few pips. It is annoying, but that's Forex trading. I think, in terms of the CAD, it's very overvalued against a number of currencies, actually. I think the market is a little bit too seeing the Bank of Canada as being very, very hawkish going forward. I don't think they're going to be as hawkish as the market expects. Also, slowing global economy is basically bearish for the commodity currencies. A lot of people saying about crude, because that's firm, should continue to support the CAD. Basically, I think the market is seeing $100 crude anyway. So I think the dip will end, and we should gravitate up to chart highs. Now I want to go to another commodity currency next, which is NZD USD. Now, in terms of this one, we're short at 68.40, and we came down to 66.87, so not far off 200 pips. I took 50% off this morning. I'm leaving 50% run with a stop back behind this level, which I'm hoping will hold, or I'm going to sell below today's low to get my other half back in. I think the Kiwi very vulnerable going forward. I've mentioned it in previous videos. Let's just see what the NZD is doing. Basically nothing. We'll have to wait for the Fed. But in terms of we've got some profit in the bank. I'll get a little bit of profit on the second one as well. If we do have a big rally, I'll be looking to hit it up towards the 68.50 level. We'll just have to see how we go. In terms of the AUD, I think that's going to be the strongest of the commodity currencies. So I like the CAD and the NZD short against the USD, with the bigger position being in the CAD. Now I'm going to go to my favourite position of all. Right, USD CZK. This is our favourite trade setup at the moment. It's got our biggest allocation in terms of risk on it. I think it looks a really good setup. I said it in my last forecast. Now, in terms of the Czech krona, it is a euro proxy. Euro going down will weigh on the Czech krona, but Czech krona, basically extremely strong here. Okay, strong against the euro, strong against everything. Why? Basically, Czech central bank raised rates to 3.75%. Then you get the big buying of the Czech, selling of the USD come in as the market anticipates the Czech central bank rising rates to 4.5% in the coming months. I just think that's a little bit too optimistic, actually. Dollar was having a sell-off in the period as well. So felt the speculators could get hit. Now we did try a trade long, but we used to brought our stop in really tight, so we got stopped out. But we got back in again, good level, 21.36, and now we're at 21.71. Half the trade is banked, and I want to see these two tails give way above the 21.80 level. So I want to go 20. Sorry, not. I put it wrong here. I put 8.82. Sorry, but it should be 21.82. Apologies for that. And then the stop, I've got my stop presently here. The stop will come up to 21.58. So sorry, that should be 21.58. Not much risk, plenty of upside potential. Okay. If the USD does fall, we would look to pick her up on strength. Okay. This one looking okay. Also, like a couple of other, well, a few Euro proxies. I like USD PLN. USD CZK is our biggest allocation, but we've got some in this one. Sorry, line my page up. In terms of big sell-off, and we can pick it up off this support level here. Obviously moved away, so I'm drawn it in, but support there. Basically, we get the big blues run off. Work our way up, looking okay. Again, for this one, for fresh positions, it would be above the high, okay, and then stop back here. Not too much risk. You're looking for a move to here, or we are, and then up to 430, which is up here. So good risk to reward. Again, if you drop back, we'd look to buy her on the strength, but hoping it can follow through to the upside. So decent profit there. What's my next pair? I like USD Huff as well, Hungarian Florent. Again, the big full, that's the exhaustion candle comes up. And, we're looking, just kind of holding nearby support. Got two tails there. I'm drawing the level in, but those two tails give way. Stop can be tight behind this first level support, okay? So not much risk up to target, first target, and then you want to get to, we wanted to get to 340, which is monthly resistance. So I really like the look of those. Right, last European currency, which is also a commodity currency, it's the US dollar against the Norwegian krona. Now, in our last weekly forecast, said we really liked it because we get a tight entry, big fall down, and then we just take a very aggressive entry back through 871. Nice move up. It's a volatile pair. Today we're coming back to support. I bumped the stop up close, 887, to get some profit if we were stopped out. And we were stopped out. But what's really annoying again, it was almost at the low of the day. Okay. Now, in terms of coming back into this one, see here, we'll go 892, which is just getting clear of the 890 level. Stop at 877, so back behind here. So basically, if we look at it doing it as a fresh trade, if we come back up, you're risking just over a grid. I think this is a good support zone here. But you've got good potential upside to chart highs, and then on hopefully to 950. So it's basically near enough a 5-to-1 in terms of risk to reward if our idea comes to fruition. Okay, so we'll see if we can get back into that one. This last pair is USD MXN. Now, in terms of Mexican peso, it's a commodity currency. It's an emerging market currency. Emerging market currencies tend to get hit hard in terms of global slowing growth and also Fed stimulus being withdrawn. They rely on cheap money, okay, emerging markets. Now, in terms of the sell-off, you get big sell-off, then we kind of slow up here. You get blue, okay? Didn't draw the line in, obviously, because we moved up a bit, but this level we thought would provide decent support. Big blue started that rally. We pushed off, but in a kind of low volatility way. This is can be a very volatile contract. Moved away from our entry, just sitting in low volatility. You need to see these two blue tails give way. If those two blue tails give way, present I've got my stop. You can see it, 21.41, just slightly ahead of my entry. But I'm yeah, if we get through those two tails, I'll bring it up behind these two bodies, okay? So it'll be a little risk or low risk against the potential reward. What is the peso doing? Doing not much, basically waiting for the Fed. The level to give way is going to be 20.70. So yeah, there's some pairs. Obviously, yeah, we had some upside in the USD, been stopped out of a couple of pairs. So I might get stopped out of the rest, okay? But they're okay profits. They're nothing, to shout about. But I'm hoping the USD reacts to the upside. If she comes down, we would look to grab the pullback. But let's see if the Fed do the right thing in terms of inflation, which should be their focus. Let's see if any volatility comes after the meeting. I'll do a general weekly forecast at the weekend, update other pairs as well. I've just been pressed for time this week. In fact, this video I meant to do yesterday, so it's a day ahead of the Fed rather than 6 hours. But anyway, let's see what happens. Thank you for watching the video. Take care. Have a good day.